Welcome to Point Blank. This is your host, Panama Crypto. Today, our guest is Bitcoin Birch. He's a serial crypto entrepreneur, co-founder of Stacked, which is a multi-services for automated trading. Welcome, Birch. Good to have you here, man.
Hey, what's up? What's up? Thanks for having me. Long time talks on Twitter. We've been in many a thread together, but this is our first time really chatting. So I appreciate you having me on.
Sweet. Let's get going. So who is Birch?
Well, that's me. And the best way I would describe myself is kind of a tech and fintech product nut. So I'm just very obsessed with the way that users interact with technology products, and in particular in the finance space, which is what I've just gained a real interest in over the course of the last 5 years. And I enjoy playing golf. I have a fiance. I live in Chicago, and Stacked is a company that I co-founded, as you said, to help users automate their crypto trading and investing experience. We have a team of 14 people here, and we're just, we're putting in the grind every day, trying to see what we can get out of it, what kind of value we can create.
Amazing. You recently got engaged, right? Congratulations.
Yeah, thank you. I did indeed. I fooled her. Convinced her to do it.
Whenever you hit Panama, let me know, man. We can play some golf.
Oh, absolutely. Yeah, I would love to do that.
So what is your in real life experience and background? Like, what are you going to college and stuff like that?
Yeah, the IRL. Well, I come from very modest beginnings. I wasn't anticipating going to college ever. I actually went to 3 different high schools, and so had a lot of different friend groups. And it just so happened that when it came around college time, my buddy got accepted to college, and he was like, dude, just apply to this community college, whatever. And at the time I was working in sales. I was literally 17 years old. I was working in a call center. And that's how I really built my career going back, a decade plus, was in sales and trying to learn kind of the science of persuasion, and really perfect communication. And as a result, really got me thinking about just user experience in general. And as just kind of a nerd in my own heart, I'm very into tech and things like that. And so when I first went to college, I started to try to study film and different creative arts. And then I flunked out of school. Took a year to try to start a company. And that's when I started my first startup, which was just an app that allows you to skip the lines at nightclubs. This was back in 2008 or something. Started getting into some affiliate sales online. So I was drop shipping stuff on eBay, and that was when I started making money on the internet for the first time. Eventually I went back to school, and then I dropped out again. And around about that time, I started really getting into tech startups. Silicon Valley boom, Facebook had just really taken off a couple years back. Instagram is this new hot thing. YouTube's catching on. I really just kind of became obsessed with that, and always had a side hustle and things like that. And what that did was it turned me on to a little startup called Grubhub here in Chicago that was new at the time. And I was a handful of credits away from graduating. So I went ahead and I finished that real quick, so that way I'd have the piece of paper to get the interview at Grubhub to lead their sales development. Long story short, spent 5 years with that tech startup, kind of put my entrepreneurial dreams on hold. We went on to become a publicly traded, tech company worth many billions of dollars. It was a huge success. And at my time, working in that tech startup is what turned me on to crypto, because a lot of developers, a lot of cypherpunks working at this young startup and talking about Bitcoin all the way back in 2015. And so that was when I got my first crypto. It was when I bought my first Bitcoin. I didn't try to trade or do anything like that. I just spent a couple of years kind of learning. And it was in early 2017 where I was like, oh, this Ether thing really seems cool. I'm gonna try to learn how to day trade. And that's when I started learning how to trade and trying to trade, and usually failing. But I've spent the last 3.5 years full time in the crypto space. So working on my own personal investment, thesis and trading, but also the last year plus has been spent building this technology startup Stacked, and trying to take some of my entrepreneurial tendencies from my experience in the past and apply it towards this new project. And so that's been going on for a little while now. It's kind of the quickest I can make it.
Interesting that you mentioned sales. Funny thing is they don't teach sales in high school nor in college.
No.
which is a basic skills
unfortunately.
for any entrepreneur.
It's a basic skill for anybody. You know, a lot of people say sales sometimes gets a bad rap. I never sold a product that I didn't really believe in, at least after I was like 20. I mean, you know, I sold some like cheap vacations and stuff over the phone before, but you know, ultimately as I got professional, I sold products that I believed in. And for me, it was important, and it was a way to make really, really good money at a young age. I was making $15 an hour. My friends were making $7 an hour minimum wage, stuff like that. But it's more important for everyone else. I think it's more important to learn some of the art of sales, in particular, like the science of decision making, like what drives people to make decisions in almost any profession. Um, because in some capacity, being an expert communicator, you know, being an expert um, communicator with other people is really what's going to allow you, I think, to find success in whatever your little niche is. So being confident in your communication is big too.
So what are you currently working on in and outside crypto, excluding Stacked, of course?
Yeah, well, that's all I'm working on inside crypto. Outside crypto, you know, I'm always trying to, might sound corny, but like just work on myself, right? Like, what are my hobbies? What are the things I want to do? I'm trying to get really good at golf, so I spend a lot of my free time doing that. I enjoy playing Call of Duty, like the next guy, you know, video games. But I also have a good group of friends, and like I mentioned, a fiance, and we have a dog, and we spend our time trying to be active, whether it's playing on our softball team or playing tennis or going for bike rides or whatever. Outside of crypto, you know, I don't have a lot of like other ventures going on. I do advise a couple of other startups, but they're also in the crypto space. I was advising a few non-crypto startups, but um, you know, I usually will be on some type of retainer for like a year or two, and so those are things that I've done in the past. But right now, Hero is a big focus of mine, as kind of like a strategy lead within that team. And Hero is just basically, if you're not familiar with it, it's a crypto platform that allows you, it's pari-mutuel kind of trading against one another. The simple way to put it is you're just choosing whether or not Bitcoin price is going to go up or down in a certain time period. And if you're right, it's pari-mutuel, so you get the payout from all the people on the losing side and vice versa. You should definitely check out Hero. So yeah, I don't have a, you know, as an entrepreneur, man, I work 80 hours a week. So there's not a lot of time outside of that. And, you know, I think that's one thing I like to point out is that to be an entrepreneur, you have to be crazy enough to quit making money on an automated basis for 40 hours a week in order to probably make no money working for yourself 80 hours a week. A lot of people see this entrepreneur and they might think like, oh, I want to be an entrepreneur. Probably not. You probably don't want to be a full-time like entrepreneur. Some people are cut out for it, certainly, but you know, it's important that you remember it's kind of a 24/7 job, and it's a thankless job with buck stops with you. And for the vast majority of entrepreneurs, it's a job that pays very little. So outside of that, I don't have a ton of additional time.
Can you walk us through Stacked services?
Yeah, I mean, Stacked is supposed to be just a really easy to use platform for people like me who don't want to try to day trade or make long-term investment decisions or have to really worry about too much. So it's really simple. Um, you know, you connect Stacked to your preferred crypto exchange or exchanges, and then you can use Stacked to buy pre-built like indexes and portfolios from that are modeled after popular funds like Grayscale or Galaxy or Coinbase or Bitwise. And you can essentially just invest your stagnant crypto holdings that are sitting on Binance into a pre-built index, like some percentage of it into an index, to try to get larger exposure to the entirety of the market. I mean, the S&P 500 in the equities market has outperformed hedge funds and traders alike for a long time. Instead of trying to day trade, you invest into a basket, and over time it grows. And so we built that product for crypto, and it's non-custodial. So you keep your coins on like Binance, you connect to an index, it'll automatically rebalance it for you. And it's just, again, it's an automated investment service. And on the other side of the platform, we have a marketplace of more aggressive day trading strategies and algos where you can connect to someone's bot. Like, these are not our bots, we don't build these, we're just the marketplace, right? So strategy author comes in, lists an algo. You come in, you simply connect to the exchange, and that algo will trade for you. You don't need to know how to run alerts or set up anything complicated or, figure out how to run strategies off TradingView. You simply connect to the algo of your choice, and we execute the long and short trades for you on your exchange in an automated way. And so, yeah, you can check it out at trystacked.com. But yeah, it's basically supposed to be the easiest way to stack sats, Ether, Ripple, whatever it is that you're into.
How does the automatic rebalancing service that you guys offer work?
It's pretty simple. I mean, you simply, right now it's on either a weekly, monthly, or quarterly time frame. So when you structure your index or your portfolio, and you can kind of edit your composition. So it has its default composition. Let's say it's 80% Bitcoin and the other 20% is split up across some altcoins. You can just move a slider down. You can move the Bitcoin slider down. It'll automatically take all that and invest it equally across those altcoins, as an example. But once you have your crypto portfolio set, you can back test that portfolio on our platform, and it'll spit out results, and it'll say, if you had this portfolio over the course of this period of time, if you never rebalanced, these would be your results. If you rebalanced weekly, these would be your results. If you rebalanced monthly, these would be your results. And the same for quarterly. And that way you as a user can determine if your particular portfolio structure may benefit from rebalancing. We're not here to tell you it's always going to be the most profitable. Sometimes rebalancing isn't the most profitable, but oftentimes it's a good way to reduce risk as well and kind of stay a little bit more conservative. So for me, for my portfolio, I have it rebalance every month. Historically, that's been the most profitable for the type of portfolio I have. And so what happens is you just check the rebalancing box on Stacked, you select monthly, and every month Stacked will rebalance your portfolio for you, which basically, for those who don't know, means it'll just sell different assets in your portfolio that have gone out of weight from how you originally set it up. So you originally said, I want my portfolio to be 80% Bitcoin, then Bitcoin pumps, and now your portfolio is 85% Bitcoin. Well, you wanted it to be 80. So at the end of the month, it'll sell 5% of your Bitcoin to bring your Bitcoin holdings back down to 80%, and it'll redistribute the holdings that you just sold into the rest of your portfolio. So that way the rest of your portfolio is back to the setup that you wanted it to be. So that's what rebalancing is, and Stack does that automatically, again, on a time frame that you choose.
I really love how you guys are bridging the gap for newcomers into crypto.
Thanks.
I have a question. When you guys are going to offer stocks within Stacked, I think it's doable.
Probably not for a while. I mean, as an entrepreneur, one thing that I've learned is to stay laser focused and try to double down on what you're good at. We have a lot of work to do just on the side of crypto, right? What Stacked is today and where we're trying to be by the end of the year is completely evolving, far beyond like a strategy marketplace. I mean, we're looking to be a full service retail wealth manager for crypto, and that's going to require a lot of complicated technology that we're investing a lot of time and resources into having built. And so we want to do that best, and we want to do that well, and we want to execute on that. If the market calls for it, and we're still solving some of these same problems, and the market calls for it, and there's an opportunity and our customers want it, certainly we'd evaluate expanding. But there's all sorts of red tape that come with some of those things, right? There's a lot of regulation. It's a lot of bureaucracy. And so within the crypto space, we have a little bit more freedom to help users, because users already custody their own money on an exchange or in a wallet. And with stocks, it requires broker dealers in almost every scenario. So it just starts to get complicated. So is it in the far distant part of our mind? Yes. Is it something that you should expect to see anytime soon? The answer would be definitely not. We want to knock crypto out first.
Good to hear. What do you think are the entrepreneur's best and worst decisions?
Well, it's hard to say. It's going to be different for every different entrepreneur. But I would say that typically, like my experience, I can say my best and worst. Historically, mistakes that I've made was attempt to like raise money too quickly. And if successful, selling a way larger percentage of equity in your business than maybe you should have. I mean, imagine building $100 million company, but only owning 1% of it by the time you get there. You make $1 million and you built $100 million company, which is, obviously a fairly large success. And so you want to find a way to maintain ownership. That's overall why you do it. But a lot of people get too quick to try to raise money. So in like Stack's case, and just in our example, we really focused on having a minimum viable product out. So my worst decisions in the past would be, try to take on funding or debt in order to build a company, instead of focusing on building like the minimum viable product that you need in order to generate some level of traction and revenue. So the best decision would be the converse of that, which is building that minimum viable product, getting something out that users can test and give you feedback and tell you if you're even on the right path, and then iterate on that and build and grow and get traction and try to stay lean. So that way you can largely run your business off the money coming in from it. And any investment capital that you might take on is going to be at a much more attractive valuation for you. It's going to allow you to maintain more ownership in your business. And then ultimately, it's going to allow you to scale a little bit more responsibly. And so I think we did that really well with Stacked. And so that was a learning experience for me from times in the past. But ultimately, I think it's really important that you try to move quickly to get something to market and then work through that and build on top of that, as opposed to just raise a bunch of money, build some big lofty product that takes 2.5 years just to get out to market. And then you find out people don't even want your stupid product anyways. That's a bad position to be in. Then you're hurrying up to pivot and things like that.
Do you guys have product market fit?
Yeah, definitely. I mean, our traction over the last 6 months has been nothing short for us of overwhelming and just, humbling and incredible. I mean, we've processed over $2 billion worth of trading orders, just in our beta, where we didn't actually do any type of formal marketing or anything. We just, again, we tried to grow from our user base and we tried to learn from our user base. And the revenue implications for a startup like ours are fairly significant. So we've made enough money just off the business to pay for the business. And that puts you in a pretty good position as an entrepreneur.
That's amazing to hear, man. Congratulations. Sometimes entrepreneur have amazing product, amazing technology, but sometimes they don't have the demand nor the product market fit.
Absolutely.
And sometimes it's just a waste of time because the product might be sometimes way ahead of its time and there's nobody that wants it.
Yep, exactly. It's not a perfect science. And some people have really, enthusiastic customer bases for products that are pretty far behind. So yeah, there's no perfect science, but I think if you listen to your customers, you can quickly find out what they want and then you can try to solve for those problems.
Exactly. This episode is brought to you by PrimeXBT, the exchange that makes possible to trade with leverage on legacy markets from a single Bitcoin-based account. So what is your overall market forecast for the next year, seeing that we already have almost hit 12,000K in Bitcoin?
Yeah, listen, we're basically 3 years in to the bear market. There's not a lot of sell side pressure, in my opinion, across the majority of the space. Now, are we going to see mini bubbles like DeFi? Bubbles from a price action standpoint, I think DeFi has a lot of room to grow, like billions and billions and billions. But are we in like a price action bubble potentially? Because our DeFi index on Stacked is up 800 and something percent on the year, 700% on the year. Probably, I think we'll see some short-term downside volatility with a lot of altcoins. But over the course of the next year, I absolutely see Bitcoin making a new all-time high. I absolutely see the overall market cap of the cryptocurrency ecosystem gaining in value, probably a decent amount. The question that remains for me is how the global economy is ultimately going to put a damper on some of our plans. It's hard for me to get behind a $100,000 Bitcoin price, or in the short term, or altcoins pumping 1,000% if 50 million people don't have a job in America, if the 30% of people are missing their housing payments, if stock markets are crashing, and things like that. It makes for a much harder case for some positive price action for crypto, and that may stifle some of the growth. So I know they're not directly correlated statistically outside of 10%, but I definitely believe that the negative ramifications of this pandemic have not been reflected in like the economy at scale yet. We haven't heard of like a ton of downside outside of people losing their jobs, but we haven't heard what the repercussions of those people losing their jobs are. Are people getting their cars repoed? Are they getting their mortgages foreclosed on? The answer is a lot of those people will, but that process takes time. It takes a couple months, right? We're only a couple months into this thing. So how that's reflected on the global economy, if the global economy is total shit over the next 18 months, and I think it might be, I think crypto is going to be stifled, but I still think there's growth, and I still think there's going to be opportunity within the market, and I still think Bitcoin's going to make a new all-time high either way.
And the elections haven't happened yet. I guess Trump has
play a
let
huge role too.
the Fed prints whatever money they want to print until a bit after the elections, right? What do you think about that?
Well, I think if a Democrat wins, the money printing, that's not going to stop it. They're going to print more. So ultimately, it's not like one dude's decision if they're printing more money. I mean, there's a lot of politicians that go into putting votes on different decisions being made. I'm not one of those people who thinks that the man or woman in office is like really the key deciding factor. They're our spokesperson for our country, so they're a very important role, but that's what they are. They're our spokesperson. Behind closed doors, all this stuff for the most part gets voted on and is very rarely vetoed or shot down by a president. So how much these elections actually affect the economy, I don't know that it matters who gets elected. If 50 million people are out of work and 30% of people are missing their housing payments, I don't think any one politician can fix that. So it remains to be seen, certainly.
So you might think that probably after COVID, after elections, we could see a recession like we saw in 2008.
So technically, we're in a recession right now. At least the United States economy is in a recession. That's a fact. How bad will it be, and what will be the extent of it? Do I think we're going to be in depression territory like 1930s? I don't think that's possible anymore. I think it's almost too big, and they'll just print more money and whatever. But yeah, we're in a recession. That's 100%. And will it be as bad as 2008? I don't know. My gut says probably not that bad, and the only reason my gut says that is because I think that we'll bounce back fairly hard when the vaccine, and I think there's been some silver lining to people staying home. And so unfortunately, a lot of people lost their jobs, but they didn't necessarily lose all of their income, though a lot of people did. And then a lot of people stayed in and didn't spend money and didn't travel and didn't do things, but still had an income and still made money. And as a result, when things kind of go back to normal, maybe there'll be like this onflow effect, right? Where, man, I didn't spend any money in the last 6 months. I'm taking 3 trips in the next 3 weeks. I'm going to the mall right now. I'm going to buy everything. Like I haven't shopped, in months. So, yeah, that's kind of what I'm thinking is I don't think it'll be as bad, but I definitely think we're not close to being. I think it'll be this time next year before we even start to understand the true long-term impact on the economy.
Do you think that we're in the beginning of a new alt season, sort of like in 2017?
No, we're definitely not in the beginning. We're full-fledged right in it. We've been in alt season since March. I mean, there's a lot of money that's been made. Now, depends on how you define alt season. I define alt season as an index of altcoins increasing in value over the period of 3 or more months. And that's been true. Now, is it alt season as in like everyone's hitting 1,000% gains? What people don't understand, a lot of people that weren't around in 2017, is that's not what alt season looked like. It wasn't every single coin every single day. Like, dude, I know a lot of people who didn't make nearly as much money as you think they might have made in alt season. I know a lot of people who lost money in alt season. There is a very volatile flux between altcoins and Bitcoin in alt season, where a lot of people were selling alts to chase Bitcoin, only in time for alts to pump, to dump Bitcoin at the bottom, to chase alts again, only for Bitcoin to pump and I saw people just nuke their accounts. Okay, so like it wasn't everyone gets rich season as much as you think. Like it feels like that for DeFi right now. Like everyone's making money. That's not true. I have a lot of user data. We have millions of dollars connected to our platform. I can tell you unequivocally that most people are not buying these DeFi coins and making thousands of % returns on them. A lot of people will buy tops and sell by, like that's just the way it is. So I want to stress that, like, there not every coin is going to do without a 10x, right? And there's going to be a lot of stuff that you're going to miss. You want to try to narrow your scope. You want to find some things that you can understand, try to make some plays, hodl those plays, be willing to dollar cost average into those things you believe in. If they go down, be prepared to take profit if they go up, and try to grab as much of the pie as you can. But that opportunity has existed for the last 6 months and has also existed previously in this bear market over the period of a few weeks or months. There's been times where coins have done really well. So, I don't think we'll ever see 2017 again, because there's going to be way more like liquidity and way more coins and way more supply. But we're definitely in an alt season right now. And it's not the first one since the beginning of like the crypto bear market.
What assets you're currently holding and why in both legacy and crypto?
Yeah, so the vast majority of my assets are in Bitcoin. The index that I run is like 87% Bitcoin. I also have a healthy percentage of my portfolio in a stable coin. I use that as my dry powder. If I have an opportunity where I want to make a purchase, I like to have Tether available or USDT available. There's also some lending plays. So I've lended Tether on a few different occasions for some APY. So I like to be able to kind of do that. Less than 20% of my portfolio is in various alts. And for the most part, there's some of these DeFi plays right now. I'm a big fan of like Compound and their entire protocol. I'm a big fan of Aave and the Lend token. I'm a big fan of Ethereum. I always have been. So I have exposure to some of those. Probably 5 different altcoins that make up 20% of my portfolio. And then I have like 10% of my portfolio that kind of just sits in a couple of different trading algos. That's kind of my fix, get to log into FTX or whatever and see how things are doing. So
do you have any
pretty
favorite
well diversified, I guess.
algo on Stack that you would like to share?
I don't know if it'd be fair to like all the algo authors if I shilled like one algo. What else? So what else say? Because we have a lot of algo authors that we support. So what I'd say is, when you go and you check out the marketplace, just understand that there are algos that perform better over longer periods of time, and there's algos that perform better in the chop, and there's algos that for the last 3 months have performed very poorly, but over the course of the last 2 years have performed very, very well. And some that over the last 3 months have performed very well, and over the next 6 months may perform very poorly. So what you have to understand is it's not a perfect science. What we try to do is make the user experience as easy as possible. Now, if you so happen to subscribe to an algo that doesn't perform well, that's an unfortunate part of attempting to use a strategy. Our goal is just to make sure it's as easy as possible for you to tap in to that algo, manage your positions if you need to, and make your decisions. And so when you go on the marketplace, every single algo that we list goes through a forward testing phase. We don't allow algo authors to use back-tested data to market their product. So you're not going to see any performance on Stacked that is from like hypotheticals in the past. It's all forward tested. And so you'll see the return performance for every single one. Some have not performed well, many have performed well. And the performance that we display is also net of fees. So it takes into account trading fees, which are a huge difference. I mean, that could be the difference between an algo performing 300% returns and 150% returns. Like fees play a huge factor. And so those are factored in on the performance charts on Stack. And find one that kind of is attractive to you, that you're like, hey, this has a trading frequency that wouldn't stress me out. This one trades 2 times a week. This one trades 2 times a day. This one trades 2 times a month. That has performance that that you feel like you are comfortable with, and try it out. That's what I can tell you.
Cool, that's fair. What's your opinion of the announcement of the Office of the Comptroller of the Currency that banks may provide custody services for crypto assets?
I think they know that they have no choice, because the future of finance, at least for a lot of us, we believe it's largely decentralized. At the very least, decentralization and some of these services will take huge market share from centralized banks. So JP Morgan may never go away, right? But they may custody $1 trillion. But they know that even though their business is probably safe for the next 100 years, because they'll be diversified, and I know they're investors in other smaller micro banks like Chime and stuff like that. But instead of custodying $1 trillion, they may be very well aware that they're only going to be custodying 300 billion, and their business is going to get smaller. They're going to have a smaller piece, of the pie. And so I think this is just a play to start preparing for that. And I think it was probably inevitable. And all it took was them seeing that there's custody companies within crypto that are custodying billions and billions of dollars of cryptocurrency. That's enough to catch a bank's attention. Listen, billions of dollars, how can we make money on that? Ultimately, it's like fractional reserve banking is like the biggest scam there is, in my opinion. So when you go to Chase, as we'll use as an example, and they custody your cash, right? That's what they're doing. They're custodying your cash. What they're then doing is lending most of that cash, over 90% in some cases, to other people who are borrowing cash and paying an interest rate to Chase, who's keeping that money and giving you a very small percentage, less than 1% of what they're making lending out your money, and they're just custodying it. So by custodying crypto, it's for no different purpose. We're going to custody your crypto. We're going to lend your crypto. There's proven to be a huge market for that, to the tune of hundreds of millions of dollars in volume. And we're going to earn an interest rate on that crypto, and we're going to maybe cut you 1% of it. And that's why DeFi is so important, because instead of needing to custody with a bank, you custody it yourself. You lend your own crypto through the network, through the protocol, and you earn the vast majority of the interest that's paid. And it eliminates the middleman. So all these banks are doing is they're just trying to maintain their position as the middleman for custody, and that includes crypto. It's a big enough market share now that it makes a business sense for them to try to do. It also is going to give the governments visibility into crypto, which they're scared of losing. So of course the government is going to approve something like this. It's going to give underwriters the opportunity to make money on FDIC insurance for crypto assets. So there's a whole business that will come of it. Ultimately, is it good for crypto? Yeah, probably. It's probably good for crypto. I don't think it's extremely disruptive, but I don't think there's like massive downside here. But I do worry about them winning over DeFi. Like I worry about centralized custody winning over decentralized custody in crypto, because centralized custody starts to eliminate some of the things that make crypto so great. When you have decentralized custody, you have that ownership over your funds. So I do worry that it'll take market share from DeFi, but I'm not surprised by the announcement, and I think maybe it'll be good to help the trust factor for some newbies for sure.
No doubt. Also will help the massification of the retail within the banks, which is non-existent right now.
Right. Yeah, I agree.
What are your thoughts on Bitcoin being money under DC Financial Services?
It's not news to me. I mean, it's been made clear for quite some period that it was never believed that Bitcoin, like from regulators, that Bitcoin, most, if not all the cryptos are securities, except for Bitcoin and maybe Ethereum. That's always kind of been the language that we've heard from the CFTC or the SEC or whomever. They've come out and said, Bitcoin is not a security. It is a commodity. So it's not, the term money, that doesn't really change anything. It's a commodity ultimately. And the only implications I shouldn't say the only implications, there's probably a few, I'm not an expert, but the implications to me are taxes. I mean, it's trading commodities is different than trading securities. Regulations are different, rules are different. Ultimately what it does make it more accessible. So it's a good thing. But it's not necessarily news. No one was out there for the most part from a regulatory body claiming that Bitcoin is a security for the most part. So
unfortunate for the countries that follow most regulations that the US getting in place, like in Panama, it is not deemed as anything. It's not even a statute in the laws right now. So it's at least in Panama, it's not taxable, as you mentioned. It would impact the taxable events in some places. Yeah. But in case if Panama, something like that was accepted under some terms of the banks admitting it's actually money, it can eventually be taxable event, which is not currently, which is...
Well, now I know why you live there. I might need to find 6 months 6 months
Yeah.
over in Panama once a year.
Exactly. So with that, we end our episode. I'm very happy to have Birch on Point Blank. Thanks for coming on, man. Can you tell us where we can find you?
Yeah, I'm just on Twitter and other social media at Bitcoin Birch, BIRCH. And definitely check out trystacked.com if you want to learn more about what we're building. Appreciate you having me on, bro.
Thanks for listening. Until next time. Peace.
This episode was brought to you by PrimeXBT, the exchange where you can trade without KYC on legacy markets with your Bitcoin. You can trade commodities like gold, silver, oil, even indexes and forex. Join now and get a 50% bonus on top of your deposit for trading at u.primexbt.com/Panama.